Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Uniswap and its token UNI, conduct technical analysis, machine learning based price forecast, regression analysis, and much more. None of the content is financial advice. All of the content available on Crypto Weeklies related to Uniswap over here, and some charts on TradingView and CoinMarketCap. So over the last few performance periods, you can see over here, this is on cryptoweeklies.com. Over the last 24 hours and over the last 7 days, Uniswap has been rallying by about 7.5%, leader of this current rally. In terms of comparative performance, or the current price action at around $6.80. In terms of tokenomics, more than 60% of the total supply is in circulation, 628 million versus 1 billion, and any token unlocks impacting the allocations going forward. Again, this is available till about August of 2024. So mostly now the unlocks could be commensurate with the inflation. So over the last 1 year or so, if you toggle between the price chart and the market cap growth or market cap chart, you are essentially seeing the same charts. That means any growth in a market cap or decline in market cap gets proportionally reflected back in price, which is a healthy sign. Most of the cryptos don't have that. So for example, if we go and just take an example of this Kava as an example, one of the top 100 cryptos by market cap over here, you could see that the token is growing again, volume is growing, market cap is growing. But if you look between the price and the market cap analysis, go to all time over here, this is the price chart. Again, series of lower highs and lower lows since about 2021, but you can see that market cap is a growing function. And if you go to a linear scale, you can toggle between the price and market cap chart, you're seeing totally different story. That is because even though now the at one point in 2024 rally, market cap was at least 30% higher than back in 2021 or early to mid 2022, but the price is much lower. Price peaked somewhere in 2021, whereas the market cap had two peaks, one in 2022 and then one in 2024. So that is something that you need to be cautious of. Again, not financial advice, but just basic common sense. If the token has a lot of unreleased supply, that could be a headwind for price suppressions and those kind of things. So in terms of now going to Uniswap and conducting machine learning based price forecast for Uni, our machine learning model trained on the weekly price action of Uniswap. You can see that this is the weekly chart in terms of candles, but what we have on this chart are the weekly average price in US dollars. You can see a series of higher lows that Uni has made since about October 2023. The September 2024 low was a low. The March 2025 low was higher than the September 2024 low. So if that stays the case, and if we are in a recovery mode, the model highlights three possible things with price action for any risk asset. They either go up with time, stay sideways, or go down with time. So in all the scenarios, the model helps understand what could be a theoretical floor or ceiling. In terms of a non-euphoria rally or recovery for Uni in the next 6 months, the price could be somewhere per the model could be somewhere between $8 and about $23. Again, if you go to the Fibonacci levels, that could be somewhere between the 0.38 and 0.5 fib level between $20 and $25. The current levels to watch for are the 20-week moving average and 21-week exponential moving average at $9.52 and $11.12 per the technical analysis. Those are the two areas of resistance to look for. And then the secondary level at around $13, that's the 0.23 fib level. And again, if the on the other hand, if the token or the wider crypto market were to have 6 months more of the bearish environment, the price floor could be between $3 per the model and $6.40. So that's the area to look for. The base case, if the prices, all narratives aside, if the price were to uh, just follow on its own accord, the base case says that the price it could go sideways between $7 and $7.30. If now we focus our attention on the regression based valuation of UNI, this polynomial regression function in this pink line wrapped around the weekly candles helps identify what is the fair value in a non-linear fashion. That is, in the bull market what is the fair value, and what in the bear market that fair value does decline with time, accumulating below. If you apply one standard deviation residual below the fair value, accumulating at those point, historically speaking, makes the most amount of sense. Again, not financial advice. In the bear market we did visit that one standard deviation, and I believe at one point even two standard deviation lows in early June to early April to early June of 2022. And also the one standard deviation floor was reached between June 2024 till about October 2024. That time we made several videos related to UNI over here on the YouTube channel. You can see over here Uniswap related videos were made around that time period. And again, if you're interested in we make daily videos to cover crypto market. If you're interested in following that risk and machine learning based journey, please give us a like and subscribe to stay updated. The fair value for UNI per this analysis comes at around $6.57, which is quite close to the current valuation at around $6.75. If there is a rally in store in the coming weeks, the first area to look for, if the prices hold or go beyond the $9 level, that could signal a beginning of the euphoria phase, like they did back in November 2024 or February 2024, when the prices at that point in time went more than higher than $10 and about $13 respectively. If we get rid of the other bands and focus on what could be a 2 standard deviation ceiling or a euphoria peak for UNI, again this analysis helped identify 1, 2 and 3 major peaks for UNI till date. At this point, if with the shape of the regression function in a downwards slope, it says that in the intermediate time period, if the rally were to go to about $12, that could signal in a halt in the rally. Again, the shape of the regression function is dependent on the price action. So if you see a series of higher highs and higher lows, the shape could very well change in the future to incline from over here, essentially from June 2023 till about again somewhere over here between $25 and $35 at this point in time. Although the shape of the regression function points to a lower valuation, again in a bullish environment that potentially cryptos are in the post halving year, historically speaking 2020 2017 2021 and now potentially 2025. With this, though the current information that we have, the highest price could go for the 3 standard deviation residual applied at around 99.7 percentile confidence level at around $18, and that could signal in or usher in a change in the shape of the regression function. In terms of the simple moving average based risk, right now the risk is about 14%. This model does identify some of the non-euphoria phases of the market cycle, where DCAing below, let's say if the hypothesis is only to DCA below 20% risk or between 10 to 20% risk, this identifies even if you go lower. There are some false positives. Again, the model does not have predictive capability to say, although right now the risks have gone down, that doesn't mean that after a brief pullback or after a brief rally there wouldn't be a further pullbacks. But although you can see historically, even though the price eventually went lower, there was a pump before again a pump before a further decline. Similarly, again this identified the bottom for UNI. If you have slightly higher risk tolerance, again accumulating 20% when the risk is less than 20%, again it's not the worst idea. Again, not financial advice right now. If the other end of the things, again other end of the analysis would be whenever the price does go between that 50 to 60% risk, that usually signals some sort of a top. If the prices were to go back to those risk levels in this green shaded color, between $23 and about $27, that could be a target for Uni. And again, that is quite confluent with that machine learning based price forecast between $25 and $28. Again, slightly lower, that at around $23, that is the machine learning based price forecast, as well as over here the 0.5 fib level comes close to that $25 target. So again, that could be a level to watch, with a lot of confluence over there. But the DCA model, which takes into consideration the regression model that we saw at a weekly level, this is price color coded with respect to the relationship between the price and the regression based fair value. Again, this model does identify the peak regression, like we did by applying 2 standard deviation residual. Again, whenever the price goes above the dotted red line, that is when again the top is nearby. Right now the 2 standard deviation residual applied for Uni comes at around $11.34, right? And the current risk for this model is at around 30%, where the price is close to the fair value. Again, historically speaking, with this model, accumulating, if we get rid of the regression line and the peak regression line, accumulating below the, let's say, the threshold of about less than 20% risk, again, was not the worst idea. Again, you could go slightly less risk averse with less than 10% risk. Again, this model does cover that kind of risk reward in the market. If we were to look at the other way to interpret is that whenever the price does go below the bottom regression, 1 standard deviation bottom regression, and accumulating below the dotted green line, again, not the worst idea. Did identify 1 and 2 major bottoms. Again, over here it was kind of a false positive, but again, no model could predict that after this major counter trend rally there wouldn't be series of lower highs and lower lows. So that's if we go and the other end of the things, again, what stays the constant is whenever the risks eventually go between that 50% and 60% level, what could be a theoretical price. With this model, it says that price above $8.75 and about $10, roughly speaking $10 over here. Take an average of this between $8.75 and $10. That could be a medium term peak for Uni. Again, about 35% from the current price of about say $6.75. So as a composite of all the models, we will discuss that. Before that, we will visit the time weighted average price, which helps identify a bear market accumulation phase with respect to the price and the time weighted average price, that is the blue line. Again, all of the models handcrafted by myself. Again, a lot of hours went into this. So if you like this video thus far, please give us a like and subscribe, and also share it with your community. And this time weighted average price model, again, the hypothesis is that in a downturn or in a pullback environment, if the underlying asset is of high quality and has some adoption going forward, and has decent tokenomics, then accumulating below the time weighted average price, if that asset has a potential return in the bull market, is not the worst idea per this model. Again, right now the time weighted average price is at around $10.92. Again, there has been some sort of a decline in the time weighted average price, but you can see essentially has flattened since about February 2024. Back then the time weighted average price was $11.40. Now it's at around $10.92. So accumulating, again, per this model, Uniswap is in an accumulation zone right now. Again, if you do a risk reward based analysis across the 3 models that we discussed, based on the DCA model or the regression based model, the time weighted average price model, the SMA or the simple moving average price based model, the weighted risk is at around 17%. Estimated bull run peak with the current price of about $6.77 is at around $37. And if that is if the price were to go to that 100% risk level, if you are more conservative than that, and if you believe that a 60% of between 60 to 80% of that could be realistic, then again dividing the $37 number by that the 60% and 80%, the target comes close to between $22 and $29. Again, all of it pointing to a confluence in that area that we discussed, between at around 0.5 fib level and the 1 standard deviation bull case, and again kind of coincides between the $22, and uh, again the 2 standard deviation is way up outside of this focus right now, but again the 1 standard deviation model at around $23, again providing a lot of area of confluence. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.